Hey, it's Ed Grabowski with Remax here in Scottsdale, coming at you today with your monthly market watch update for August 2022. All right, so the big question we got today is, are we in a market crash? So there are several things that are affecting the market right now. Really, the first question is are we in a recession? And it really kind of boils down to is who you ask. There's a lot of economists out there that believe if we have a 2 consecutive month drop of GDP, that we'd be in a recession. And if that's the case, yeah, we might be. Now, while the Federal Reserve is working to control inflation, what he's doing is actually driving up interest rates. So the cost to borrow is getting more expensive compared to where we've been over the last decade, for everything from credit cards, auto loans, and you guessed it, mortgage rates. But it's important to note that, at least in the short term, that there seems to be some stability in the mortgage rates. In fact, with the last Fed bump that we saw over the last couple of days, I think it was last week, mortgage rates actually have stabilized. In fact, we've seen rates as low as 4.25% for a 5/1 ARM, which compared to the highs that we've had over the last couple of months, pretty affordable, and really only marginally higher than what we saw since the beginning of the year. So from a buyer's perspective, still quite a bit less than we've seen from the highs over the last couple of months, and only marginally higher than the rates we saw since the beginning of the year. Now, the market, we're still going to see some fluctuations and probably see some increases, but there are solutions for buyers out there who's willing to invest in today's market. Now, if you are a consumer who's considering either buying or selling in today's market, you're hearing a lot of misinformation about what's happening. We have everything from the doomsdayers who say that the market is near the end and we're going to crash like we did in 2008, to those who out there are saying that everything is fine. We've seen an increase in values of 17% year over year. The reality is we're probably somewhere in the middle. So really what our market is doing right now is it is trying to establish a new basis for values. Now, our market is always going to be jockeying up and down in position depending on the amount of homes we have available compared to the number of potentially active buyers in the marketplace. Really supply and demand. So over the last few months, we've seen a pretty sizable increase in the number of available properties for sale. Here in Scottsdale at the end of July, we've had a little over 1,800 homes active on the market, which is up 79% from 2021. But what isn't being shared with you is that the vast majority of homes available for sale were already on the market. The actual number of new listings has actually dropped 4% year over year. Now, from an historical perspective, we've been talking about low inventory numbers for over 5 years now. And if we look back at pre-pandemic numbers, we're still below inventory numbers from July of 2019, down 17.8%. And we're kind of more in line with inventory numbers from October of 2021, the last quarter of last year. So an increase in available properties really should be welcomed by buyers who are looking to purchase. But since most of the increased inventory is from homes that were already on the market, the expectation that the market will continue to be flooded with new inventory, to be honest, is probably not in the cards. What it actually shows is that the potential number of buyers in the marketplace have actually gone down. In fact, the actual pending contracts are down sharply, 57% year over year. Buyers are impacted by a number of things. Most importantly is affordability. They've been pushed out due to increases in the cost to borrow and huge ramp in values over the last few years. Just to give you a sense, median value in July of 2019, $470,000 here in Scottsdale. This, at the end of July, it's up over $800,000. $802,000 is the median price for a home sold, which is an increase of 70.6% in 3 years. So what we're actually seeing is not a market crash, but rather a market contraction. The actual size of the overall market has been reduced by over a third. Price volume is down over 36.2%, which would be consistent with a recession. So what does this mean for consumers who are looking to buy or sell real estate in the market? Well, from a home seller's perspective, there is a pretty good likelihood that we're going to have a pullback in values. But keep in mind that the market has been very favorable for property owners over the last 3 years. Like I said, over 70% in 3 years. So even if we took a hypothetical 10% haircut, you'd still be up over 50% over the last 3 years, which is a pretty good return. We are likely in a softer market and for the foreseeable future, and it's going to become increasingly more price sensitive and competitive for property owners. The property owners who get out ahead of the market are the ones who are going to capitalize and capture the most equity. The same token, the people that play the chase the market game are the ones who are going to become victims of a sliding market. Moving forward, the ones who capture the greatest return when they sell are going to be the ones who work with an agent who can help to price them competitively, have a comprehensive marketing plan to make sure that your home gets in front of more buyers. They have an expansive network outreach and the ability to help you to leverage negotiations with buyers. Those who do their advertising on syndication services like Realtor.com, Zillow, other IDX services, that is just not going to be enough moving forward. And I would try to steer clear of agents who are promising access only to a captive group of buyers, promising you a quick contract, no showings, because that is certainly going to limit your potential buyer pool for your home, and ultimately the amount of money that you walk away from the table with. With a market contraction, it's important to note that about a third of the homes that are on the market are never going to get to the closing table. Work with me and I will make sure that you get there and make sure that you sell for more money. So from a buyer's perspective, the last couple of years have really been challenging. But moving forward, you're going to have a lot more opportunity, a few more opportunities than what you've had over the last couple of years, and a lot less competition. Believe it or not, you're actually going to have the opportunity to negotiate on your new home purchase. As a buyer, you want to make sure that you work with an agent who can help you to come up with solutions for the higher cost to borrow. And there are programs out there to lessen the burden for the cost to buy. Also, you want to work with an agent who is willing to go to bat for you at the negotiation table. Believe it or not all agents are the same. Work with me and I will make sure that you get a great deal in today's market. Look, I believe my clients deserve better. I want to earn your business and help you to take advantage of the opportunities in the marketplace. The right agent is an investment in your bottom line. If you have thought about selling, let's talk strategy and how to maximize your home's value. Or if you're a buyer and want to get a great deal in this marketplace, call me. Let's connect. You can reach me direct at 480-359-5150. Again, I'm Ed Grabowski with Remax Excalibur here in Scottsdale. I appreciate your time today. Look forward to connecting with you and helping you to achieve your goals. Have a great day. Thanks.